Hello guys, welcome again to another session, another weekend session on our value investing series. So directly getting into the topic. These days you are seeing a lot of news about US, about Mr. Donald Trump, the US president, then about the US Fed, interest rates, inflation, yield curve inversion, lot of things. Also, if you see, there is rising tensions of US with other countries like India, China, Russia, etc. Now, let me get directly into the topic that what is the future of US as per my analysis. If you see, US is in a very bad shape as of now. In the sense, the dominance of dollar, that is one of the thing which has been keeping US moving ahead. And how the dominance of dollar is ensured? It is through the strong fiscal prudence of US. So US will never default on its debt. US being the largest economy, and the trust of all the countries or the entire world on US is the basis on which the US dollar is considered as the strongest currency, and majority of the trades is happening in US dollar, or at least it used to happen in US dollar. Now the rise of BRICS nations, wherein yuan, ruble and even Indian currency INR is being utilized for various trades, though still US currency is the majorly traded, or it's a major currency which is used for all global trades. Now why this shift from US to other countries, or from US dollar to other currency? This basically is all about as I told, about the fiscal prudence. Fiscal prudence is like the financial health of the country. Now if you see, as I speak, the US total debt is nothing but what the country has taken as loan. In the sense, if a country takes a loan, it issues bonds, it borrows money from other nations and private organizations, and they repay that bond in the form of loan with some interest rates. So now China was the second largest holder of US treasury bills or US bonds, and then Japan was the highest. Japan is still the highest, but they have reduced, or they have sold a lot of bonds and brought back their money from US. And also China, if you see, they have touched their almost 10-year low of US treasury bill holding. They are also selling huge amount of billions and billions of US treasury bills, and hence the demand for the US treasury bills is dropping. Almost $1 trillion. You should mind that India's economy is around $4 trillion. So US debt repayment yearly has touched around $1 trillion, and in next year it is supposed to touch $1.1 trillion. So almost 1/4 of Indian economy or India's GDP is the interest repayment of the US as a country. So this amount has even exceeded their defense spending, which is highly alarming. And also the tax collections, this debt repayment is just 20% of the total tax collection by the country. So this is really alarming. So the incoming revenue is reduced and their debt is building up. Now there is something called debt ceiling, which I had explained earlier also. So beyond a limit, the country is not supposed to take the loan, because they may go for a default. But this amount which they can take as debt has been increasing, and the debt ceiling has been increasing that level. And also, as I speak, the debt to GDP ratio also has increased much above 125%. So this is highly alarming. Why this GDP ratio is because whatever they based on their productivity, whatever they are getting as revenue, that revenue itself is going very low compared to their debt. So how will they repay their debt? US is releasing this week also loads of their treasury bills, because they want to borrow money. But then this is basically done through treasury auctions. But these treasury auctions are failing, it seems. The countries or the organizations who are buying this don't have a demand for that. there is no demand for that means there is no need, or they are not buying, so the demand goes down, so the supply is excess, so the value of the bond also goes down. But then because people have lost the trust in US economy, so this is happening. So what US is doing, already the US central bank, the Federal Reserve, is trying to control the inflation. Now kind of inflation is in their within their limits, as they have been continuously increasing the interest rate, and if interest rate increases, the borrowing power reduces and the spending reduces, and then the inflation comes down. But now silently the Fed is buying the US treasury bonds. Why? Because if the demand drops, then the value of the bond goes down, also the US currency goes down. So for that to remain in their constant level, they are silently buying. I think around $43.6 billion treasury bills has been bought by Fed last month. This was done in 4 days, in fact, $43.6 billion, and also out of which $8.8 billion bonds was actually long-term 30 years yield bond, which is a long-term bond. There are short-term bonds and long-term bonds. So normally the long-term bonds are supposed to have a higher interest rate, because if somebody is buying the US bonds for a longer term, there is a risk that they may default, so they will ask for a higher interest rate compared to shorter term, wherein it is predictable, quite predictable, and there is lesser risk. So the yield is normally lower, the interest rate is normally lower in shorter term. But these days, in between also I had done a video on US recession, wherein I have told that there has been a yield curve inversion, wherein the short term bond yield has increased compared to the long term, wherein people are thinking that in long term US will do good, and short term there are a lot of uncertainties. So this is many a times the representation of the upcoming recession. So US has added this year around $1.6 trillion into their debt burden. See that, imagine that, how $37 trillion is the debt. India's GDP is just $4 trillion. So how big their debt is, just imagine. And US GDP is around $27 trillion. So that is the rate of debt they are having. So now the Trump is like doing what all things, like he is trying to bring in the tariff war, wherein they can force other countries to do trade with them, asking Apple to stop their business, their manufacturing facility in India. So all these things he is trying to do. It is not because he has some grudge towards India or China, but US economy is actually falling. So to stop it from falling or failing, he has to do something. So he is doing increase in tariff, then he is telling one day that he will increase tariff, next day he is telling that he will not increase it, because now countries has lost their trust. They are selling the US bonds, the US is losing their credibility. The whole point here is that I may not expose myself to US stocks. You can have SIP investments like in Parak, FlexiCap funds and all, wherein you have got US stock exposure. But don't get so much exposed to US stocks or US investments, because the future of US economy is a question. Again, coming back to the US bonds, treasury bonds. So in 2012, the foreign nations used to hold around 50% of the total treasury bonds. But now it has dropped to as low as 22 to 23%. So almost half of the positions has been cut by various countries like China, Japan and other major treasury bill holding nations. Again showing they have completely lost trust in the US economy story. Now why all these things are happening? So rising cost to hedge currency risk have made US dollar assets less appealing to European and Japanese buyers. As you know, the US dollar rate is also plunging. The trade tension also has made countries like China to discontinue or sell off the bonds and look for other markets or other investments. As I told, China was the second largest holder. Now it has become the third largest holder of treasury bonds because they have sold huge amounts of treasury bonds because of the trade tensions between US and China. And also they're losing hope in the fiscal prudence of the country. So at one side, Fed is trying to control the inflation by increasing the interest rates, and other side, silently they are doing quantitative easing by buying the bonds and trying to control the yields, because if the bond yields increase, so people will look for investing in bonds rather than in other investments or businesses. When then they invest in bonds, safe assets, then businesses won't grow or the new employment will not happen. The people will lose their job. Again, the economy, GDP will fall. So this is all the Fed is trying, I would say, swimming here and there to somehow balance each of these things. The rising issue of economy going down and falling into a recession on one side, and also the other side of quantitative easing because the economy is not doing well. So this balance is basically the intelligence or how the central bank or any central bank controls the economic progress of the country. But seems US is, at least as per me, US is failing in this. And even if Trump brings in things like this, and now he is screwing up relationship with Elon Musk and other industrialists, so this is probably not a good sign for the country. As you always know, US sneezes, the entire world gets cold. But then now various countries are becoming independent. India is taking a lot of initiatives. Hats off to Indian government and the industrialists in the country, wherein we are making new trade deals with various countries, UK, Japan, Russia. So, and even if our trade relationship improves with China, then this will actually help our economy to progress much faster. So now the US president or the US officials won't like this, because if we emerge as a superpower, we Indians emerge as a superpower, it will disturb their monopoly and their business or their economy. So they will bring in various things like Apple should get out of the country and all those things. So that is quite normal. But we should be proud that we are in the right path. So stay invested in the country, in India, for next 10 to 15 years. As I always say, you will definitely make money in the stock market and other investment alternatives in the country. So see you in next video. Till then, happy investing.